And I think the market's going to sink. I think it's going to be a slow sink, like Japan.
So what happens to your yield, Rob, when your asset drops in value?
You don't want your money. The first rule of money is don't lose it. So I don't care if there's a lot of cash flow guys going, I want cash flow, I want cash flow. Yeah, but you know what? I would rather, to me, I'm a capital gains investor. That's what I want. Capital gains. I'll take cash flow in a hard money loan because I'm making 12% in 4.
And the reality is you're pinching down the loan to value to a number that makes you very good.
Yeah, then you can put your money out at 12 and whatever points you can get if you're a broker.
And there's 2 guys back there that can help you if you don't figure it out.
And if you're a broker yourself, look, I'm a broker myself and I'm a real estate guy. I don't need, that I can show up at a site and just charge 4 points because it's my own money and get 12% and not charge any, appraisal or loan cost.
How are you making the extra money? Now, hey, Rob, talk about next year. 2012, what do you see for real estate, specifically to the year 2012?
Well, we might stabilize a little bit, but I think it's going to be a slow sink, guys. To me, it's still more risky having your money in the market than doing fix and flips or hard money.
One other question. This is going to be a long one. Japan's been at it for a long, long time, going nowhere.
21 years.
Yeah.
Right.
How far into it are we? Yeah, not Japan, but us. How far into this are we, and how much longer?
Well, I think
best guess today will change.
The real estate market. The bubble popped in 2006, and then the stock market crashed in 2008. So let's just use 2007 as an average. I mean, and even if let's say we're 5 or 10 years, at the earliest that's going to be 2012. That's not going to happen. Put 10 years and we're in 2017. And it could go on, because we're following the path of Japan, where it's going to be a slow sink, slow sink, slow sink. You know that the Nikkei Dow is like 80% lower today than it was 21 years ago? So there's your buy and hold for the stock market. Okay, how about the buy and hold for real estate? Housing prices in Japan are like 40 to 50% lower 21 years after the peak. That kind of screws your buy and hold strategy up too, right?
Rob, last question. What about the thought dollar cost averaging? Stock people love to sell it to you that way.
Dollar cost averaging. You know what? That's an okay strategy. I can't.
Because there are a lot of buy hold people here, and they're thinking, well,
that's a better strategy.
My goal was that
That's a better strategy than no strategy. But is that the strategy I use? No.
That's for the 2 blonde ladies in the room.
I'm a timer.
Beating me up in the bar. I want to hold.
Yeah, I believe in following. I believe in following trends and market momentum. That's a better system. But look, what I don't like, I don't know why you mentioned dollar cost averaging. But if you keep doing that, here's the point.
Because that's how the stock guys sell you and losing money.
Well, yeah, it is. You'll lose less money with that strategy than the buy and hold, but it's still like a losing strategy. And most of these money management guys, if you don't know it, is all they do is they have asset allocation. So they just move assets around. You're always in the market, but it's rebalanced, so you lose equally all the way down.
Watch it go to zero.
So it's not just one of your asset classes that crashes. They all kind of go into a slow crash.